think what we are seeing is generally what we've been experiencing for like four weeks right now. Basically, there's sort of a risk off right now on emerging markets, and we've seen that hit other markets very hard. Nigeria, I think we fared very well. Naira has been stable around 360, 361. Yeah, so this is probably the lowest we've gotten in a while, but it's basically because of the reduced supply as we speak, based on the foreign
so the inflows
investors
from the foreign investors has dwindled to some extent.
Exactly.
But do you think that's the new normal in the second half, or is there any prospect at all that we could see those volumes pick up again?
No, I think it's just cycles. If you look at the macro fundamentals are still strongly in our favor. Oil is still up there. I don't think anything has really changed that helped us in the initial part of the year. So I think we'll see the break then. We'll probably see these flows come back into the market. There may be, of course, maybe there's also some extra caution because of the coming elections.
So in terms of true value, where does that leave the Naira at this point in time?
Yeah, well, right now, we can say the ironing window, that's the effect of the ironing window. The Naira is probably well priced at 362, 362.5 levels. It's strictly driven by demand and supply, which is what we want.
All right, let's shift our focus briefly to the fixed income market. And what's your outlook for the for yields in fixed income securities over the next 6 months? We do know that we have the MPC meeting coming up in 2 weeks. What do you anticipate?
I think, yeah, the fixed income space is also not independent of what's happening in the FX. Yields were attractive for a long time, and we saw inflows, which also helped with the FX. So what I think we are seeing now is also that lack of demand from the foreign investors. So we are just seeing investors just being on the sidelines for a bit. So we've seen yields rise gradually on the long end of the curve. On the short end, that's with the treasury bills. We see that more of liquidity management taking place. This week, we expect maybe eventually FAC will come in. We expect some maturities on Thursday. So on the short end, it will still be the liquidity players trying to buy to maximize returns while waiting for,
But what about on the issuance side? Because I saw a very interesting graph last week that really painted the picture for us that year on year we continue to see the government spend a lot more. Every year the budget increases. But on the revenue side, even though the budget revenue estimates may be one number, but they're very often not at par with the reality. And so as a result, we've seen while revenues have been relatively stable, they certainly haven't been moving up at the same pace at expenditure. So what does that tell you in terms of issuance? Can we continue to anticipate that the government will issue more bonds in the coming months?
Yeah, well, the government has chosen a stance of more foreign bonds, trying to increase our foreign borrowing. But on the other hand, like we said, I think the revenue component of the budget is the realest part of it. We all know it's a bit, it depends on oil prices, also depends on our production. But can we really do, we can't do a lot about that. As regards the budget, they keep increasing the budget, and that's what we are seeing. So you probably have to borrow more to fill up the deficit, and that's basically what we're seeing. And now the cost is getting to the government, and that's why they are pushing for more foreign borrowing. So we'll see how it plays out.
So yields were reported to have remained flat last week, shedding a marginal 1 basis point week on week. What does that tell us of the body language of investors at the markets at this time? Yeah,
like we said, the market is probably going through a flat phase, both on the fixed income side and on the FX side. On the fixed income rates usually attract the FX into the country. So probably because of general sentiments and obviously because of the coming elections and so we're probably seeing investors on the sideline. That's why market.
So all things considered, what would you say to an investor looking at the Nigerian local fixed income markets? What end of the curve should we be playing? How do you see things evolving over the next 6 months?
Yeah, well, for any investor, you probably play on the short end, just so that you don't get stuck when eventually yields either hit where they're supposed to get to, or just play on the short end right now.
Move higher.
Things settle. Yeah.
Yeah. So you are certainly anticipating that, if anything, we either stay flat on the long end or those yields continue to move up. Is that what you're saying?
Exactly, for now.
Now, in terms of CBN's intervention activities, should we look out for any OMO auctions this week?
Yeah, well, this week, OMO is basically liquidity management. This week, we expect a lot of funds to hit the system, so we should expect CBN to come and mop up some funds.
And what's your perspective on this point? Year on year, we continue to see there's that conversation about us bringing down rates, and inflation has moved in the right direction. But I think the sentiment has changed very significantly. More people are saying now that it's very unlikely we're going to see lower yields. when you look at those inflation numbers, to what extent are they important in terms of determining the direction of yields and, of course, monetary policy?
Yeah, well, yeah, inflation is quite important. But I think the way our market is structured, the stability of foreign exchange, I think, impacts more. So, and I think that's why the CBN has been stable with their interest rate policies.
So
you say that people want rates to be lower, but CBN has been.
So will you say that the whole conversation around FX stability is now like on the front burner, the number one concern as opposed to inflation? Because inflation has now come into a reasonable level. Even if it were to pick up, people won't be too concerned. But now there's going to be a bigger focus on the management of the exchange rate.
Yeah, I think FX takes the front burner as of now.
As we enter into a new half of the year and effectively a new quarter, starting from last week, what factors will determine the movement of the yield curve and the yield environment generally?
Well, like I said, I think one of the biggest factors will always be the portfolio investors. And I think one thing the CBN is also trying to do is they're trying to be cautious with interest rates. I don't think they want to take interest rates to where we're coming before, where 1 year interest rates were like 20, 21%. And it was just, investors just found it too good to be true. So right now, everybody's just being careful. So we'll probably see investors try to weigh their options more because the assets are no longer very cheap. So you just wait more, look at your risk appetite, and if you're comfortable, you come in.
Yeah.